Hey everybody, good evening. It is about 7:45 on Tuesday night. I'm going to go ahead and do this tonight and share it with you guys by link instead of doing it live in the morning. And the reason for that is because it's the first day of school, and with 5 kids and the COVID situation and the masks and the requirements and the stuff that goes with this situation that we're in. I need to be available tomorrow to help get the kids to school. So I thought I'd just go ahead and shoot this tonight because there is a lot to talk about and a lot to cover. So thank you for bearing with me on that. All right, let's just jump right into it here. We've got the chart of November soybeans on first, and then we'll get to corn because I know everybody wants to talk about corn. But beans are really interesting. Last week we talked about a couple of things. Let me refresh you. Last week we talked about this gap that happened on Sunday night, and it gapped above this green line, which is the 200-day moving average. And then it kind of stalled out. And this was almost a hook reversal here I guess this was last Wednesday. And then what we talked about, though, was that likely a test of this line was going to come because I explained it to somebody this way this week that this business is a lot like the game of horse. If you're going to gap the 200-day moving average, which we've been below since early January, if you're going to gap above it and work your way immediately higher, you're going to have to prove it. And so we did that here Sunday night. We immediately came down and tested the top of the 200, and then we slingshotted and just bounced right off of it and into today's day, which was a big up day. And then what's really compelling about this move in beans is that not only did we hold all of this, break up through support, we broke through all of the prior support that had been holding us down. And this move broke back above this intermediate high, all of these highs, all the way back into all of this congestion area, all the way back here. So this evening, as we're trading, this high right here seems to be a little bit of a challenge area, which is 922. We've been above it, but we haven't been able to hold it yet. And there's also been a lot of volume and a lot of momentum behind this news. And what's interesting to me about that is that this move has happened in the face of a carryout that's expanding. We talked about that last week. The USDA says that the crop is massive, and yet we are rallying right off the top of it, which tells us that the market doesn't believe it. And generally that's because somebody knows something and is looking to push the market around and get established in that position. Now, I don't know what that is. Maybe it's just the heat and the China buying. I don't know what else it could be, but this is a powerful move. And what's even more compelling is that this is the report day where the USDA said we have yield of 53 bushel per acre, and our carryout grew exponentially. But what's interesting is that we're already $1 above where we bottomed out in April. And during this whole time period, through planting, through the growing season, right up until this last report, the crop has gotten nothing but bigger and the carryout has done nothing but grow. And yet we've rallied $1 off of the bottom. So clearly something has materialized that may not yet be known. And I'm not going to pretend to know what it is, other than to say maybe we're looking for something. Maybe it's the dollar that's been weakening and beans are getting a lift from that. Maybe it's something else. We don't know. So stay tuned. Again, like I said, this is a game of horse. So now that we've broken up into this range, and if we can break on top and kind of come up to this red line here, it's 928. If we can break above and hold that, then the next level of resistance, I got to make this screen smaller for you. The next level is all the way up here at 965, which is the bottom of this range here from when the report came out. So beans are very interesting, very compelling, but they've got some more work to do. So it is not out of the question at all that we've maxed out, that we've reached the peak, and we're going to trade sideways to lower here. So don't misunderstand me and don't misunderstand that I'm super bullish. I'm not. I just am acutely aware of this setup and how powerful that can be. And it would not be shocking at all to see that extend another 40, 50 cents back up into this area. I'm not saying the fundamentals warrant it, and I'm not saying that by the time you're watching this tomorrow morning, that we're not going to be all the way back down at 880, because that can absolutely happen in this market, and we need to respect it because anything can happen. But it looks to me like if we can hold this 920 level and chew through this 928, then we have a legitimate chance of something more significant and higher. So what do we do with our marketing program? I think the most prudent thing to do is to price into it. I don't know where we're going to be next year, but I think if you're a nice thing to do for farmers, and this is a mistake that most farmers make, is they wait till the market breaks to sell it. I think it makes sense to sell your beans into this rally in the cash market, and then look to re-own a pullback if that were to materialize. I would go ahead and take that approach, because just buying the calls, that's pretty expensive. Holding your cash, the carries aren't that great, and we don't know what's going to happen with basis and those things. So a bird in the hand is worth two in the bush. And if we can rally up into this area, I think it's wise to cash in on some of it, if not most of it. So I think we're going to start selling near this 930 level, and we're going to sell more at 940, and definitely at 960 we're going to be sellers. And then if we need to, we'll be more than happy to re-own it going into next year. The oscillators down here and our trend following indicators are all confirming that this is a nice strong move. I don't have any major bullish or bearish divergences or anything else that would indicate this move isn't legitimate. So I think we've got a shot here, and giving it some room is good. Making some cash sales, 5,000-10,000 bushels at a time, will help you stay in this move and not get overly complacent. All right, so that's about 8 minutes on soybeans. If you have any questions, please give me a holler. But we've moved a long way in the face of bearish news. Something's going on in this market. All right, let's look at corn. Corn's really interesting. I'm going to get this cloud off of here. You can all see that we're above it. Okay, last week we talked about how corn had broken up, and it looked like we might come back down and retest a little bit of support. We did that, and then we've immediately turned around. Now, right here, this is Monday night, and Monday we all know that the crop conditions declined by 5%. So from a conditions standpoint, the USDA has now trimmed all the way down, and believe it or not, the crop conditions are on a collision course to match last year's crop conditions, which were not good. So this crop is shrinking before our eyes. Maybe it's because of the heat. Maybe it's because of the storm. I don't know what exactly is causing it, but it's shrinking, and the deterioration of that conditions, when it's accelerating the way it is very, very bullish. So we saw the market react strongly to that today. And remember what else is going on in the background in corn. If we can pop a little bit more, what might be unfolding here is the realization that the world ending stocks are lower than we thought that they had been, and China is indeed in desperate need to buy corn. So that will manifest itself over time. I don't know any more than anybody else does about that, but it definitely could happen. Now, I'm going to put an indicator on here that you've never seen before. But what it does is it gives us a visual of Fibonacci targets that we can look to see where this move might run into a little bit of resistance. So I'm going to put that on here. We're going to take from this low here, and you can see this ladder here that it plotted. Okay, each one of these lines is a Fibonacci forecast based off of this low to this high. Actually, from this low to this high here. So based off this sell-off, where would a rally go to? And you can see we gapped above 1. We traded right to 1 here, and we've found a little bit of resistance at this level tonight. If we break it, realistically, this 64 up to 73 level is our next target. Now let me add to that for just a second. See this gap here? We had a gap down here, okay? This is the crop report that was very, very bearish. Now we've gapped above it. So we filled this gap and created a new one. That turns all of this pricing action down here into an island. See how it's off by itself? It's got no family. So all of this price action down in here could be an area that is not revisited for a very, very long time. And this gap can also be considered potentially a measuring gap. It's either a breakaway, measuring, or exhaustion gap, right? There's 3 kinds of gaps. We've done this before. If it's a measuring gap, we measure from the bottom of this move, which would be 320, to the top of the gap, which is 345.5. So you got 25.5 cents. And then you would add 25.5 cents from the bottom of the gap, which is 348. So you go to 373.5, which shockingly is right here at this Fibonacci retracement level. So from a targeting standpoint, anywhere from 364.5 to 373 is going to be a really good area to put some sales in, because we should find some pretty significant resistance in there. Now, it does not have to stop there. This market can overshoot that and come all the way up to this 382 level, which would be this blue line, which is where we really started to fall apart back in March. Okay, this high right here is where we started to fall apart. I'm not saying that's where we're going right away. In fact, I can see us moving up into this area right here, and then selling off and coming back and closing our gap before we move back higher. So we could see a move up, move back down, and then we can revisit. I think the odds that this low gets taken out are low. It can happen, and we can turn right around and extend this lower if something were to happen, say shut down ethanol, shut the country down again, whatever, right? We can see things that could cause this market to go down. But the reality is right now the market is trading weather, and it's trading demand, and it's doing so in an enthusiastic pattern. And if we can take out these highs at 363 that were set in July, then that definitely sets us up for a higher move. So if you can hear the disbelief in my voice, it's absolutely shocking that we're talking about corn testing 375, 380 when we thought it was going to be free or $1 just a few short weeks ago, based on everything that we knew at the time. So anything can happen in these markets. That's why they're so captivating, and I think we'll just have to stay tuned and watch it. From a marketing standpoint, if your basis levels are good, I would and plan to layer in cash sales into these levels. Fix the flat price, fix the basis, especially into those early basis sales that we already made. I would be very interested in just setting those and forgetting them, and then buying it after we retreat just a little bit. So I wouldn't do anything with 2021 yet. I'd wait and give it some room to see what might actually transpire. But for this crop coming in, especially if you're heavily leveraged and need cash flow towards the end of the year, anywhere from here to 373, 375 are prime sell zones. I would be active and sell into it. A good idea would be to sell 20% of your production right below 360, 20% of your production right below 370, and if you get to 380, sell 40% of it. Just make a big sale there, because that's a gift that you did not think was coming. And then we can always re-own it. There's always ways we can get to it, but that preserves your cash flow, gets your bins empty, and lets you focus on managing risk out for next year if we're lucky enough to get into those prices. So that is corn and beans. Let's take a quick look at our schizophrenic cousin, Kansas City wheat. It is all over the map. It is absolutely crazy to watch this thing trade. Excuse me. Look at this day. So the range on this day here is 17 cents. The range of yesterday, or what would be Tuesday, was 16 cents. Every day is 15, 16 cent ranges, and we trade the top and the bottom of them almost multiple times, 2-3 times in the day. If I backed this out and showed you shorter term charts, it's just shocking what happens, and very, very difficult to trade. But on the plus side of the world, it looks like we are bottoming. And if corn and beans are going to go ahead and rally and work themselves higher, then there is a solid chance that wheat has also found a floor and can work itself higher. What we're looking for as confirmation of that, what I'm really looking for is some sort of normalcy in a trend, right? I'm looking for a consistent series of higher highs and higher lows, a pullback, and then a turn back up. So if you could consider this higher highs and higher lows, which I guess it technically is, even though it felt more like whiplash, if you can consider that higher highs, higher lows, then what we're looking for is a fairly organized pullback, and then we turn back higher, and then we can start talking about wheat finding some sort of a trend, some sort of normalcy that we can actually trade from. So we've been out of this market for a while. We got chopped up pretty good in it, but that's okay. We'll sit on the sidelines for a bit longer, and then we'll jump back in with both feet and get ready to trade this market again. That is what I have for you tonight. I hope this is helpful. Please do not hesitate to call me, email me, text me. Happy to continue going through things with you. One last time, 355, 360, 365, 370, 375, 380. Those are kind of your 3 pricing points, and I would definitely layer in some sales to protect yourself on those. I hope you all have a great day. We'll talk to you later.